Welcome back. The mid-cap index was in the red, but the Sensex and Nifty still in the green. Not by much though, just about 10 points for the Nifty. Godrej Consumer's Q2 numbers actually met street expectations on all counts. Vivek Gambhir, MD of Godrej Consumer, is with us now. Vivek, good morning. Last quarter was a bit weak for volume growth. This quarter, the volume growth was back to 9%. Where do you see that as a trajectory for volume growth going forward?
Good morning. Clearly, as you mentioned, we have been quite pleased with the strong volume growth that we saw this quarter. And what is encouraging is that if you look at our performance over the last 6 quarters, in 5 out of the 6 quarters, we have delivered volume growth 9% or higher. Our expectation clearly is to do better in the second half of the year. We are seeing the early signs of a revival in consumer demand. We've also launched a few very exciting new innovations. So the combination of an improved environment along with the work that we are doing in distribution and with our new launches gives us a lot of comfort that you should see even a stronger performance in the second half of the year.
Vivek, morning. But the street is really worried about the kind of performance that you've seen in the soaps business. Your soaps revenue has fallen 10% this time. That's the lowest that you've seen in the last 5 years. What's going wrong? Is it competition and in the second half?
So across the board, I think the soap sector has been seeing challenges, not just us, but across some of the other players as well. What is happening is that as palm oil prices have gone up, most players have been withdrawing consumer offers. So typically, whenever you withdraw consumer offers, there's a certain amount of reluctance from the trade to continue stocking the product. Second of all, because we've had promotions for 3 or 4 quarters, which has been a fairly long period of very aggressive promotions, there is a fair amount of excess stock in consumer homes. And so I think this will take a quarter or two to normalize. This is something that we've seen before as well, nothing unusual. So in terms of our brand equity, we still feel quite good. And what's quite, again, encouraging for us is that while volume growth has been negative, as we've withdrawn offers, our unit sales have actually been quite good, and our Synthol brand continues to do well. So I do expect some challenges in soaps in quarter 3, but by quarter 4, hopefully things should normalize.
Okay. Morning, Vivek. What's the likely impact of GST? I thought for guys like y'all, from the fine print of the press conference, we got the sense that y'all might move to the 18% bracket. Big difference?
I think generally for the industry as a whole, the effective tax rate today is somewhere between 27 to 30%. For us, the tax rate is lower because we are manufacturing in a few tax-exempt zones, and those exemptions will hopefully continue in the years ahead as well. But if we see an effective tax rate of about 18% for the FMCG industry as a whole, I think that should be quite positive in terms of boosting consumption and should add a significant amount to GDP growth.
Your international revenues so far have been good. It's been up about 15%. But do you think that growth rate could be under threat in the second half purely because there's a lot of weakness in many markets, including markets like Indonesia, Latin America? UK has been very weak post-Brexit. Will that threaten your 15% growth rate?
No, I think our international growth rate should definitely be much better in the second half of the year for a bunch of reasons. Firstly, our Indonesian performance was below expectations in the first half of the year. We should see Indonesia delivering better in the second half of the year. I think Africa should sustain its performance. We are seeing improvement in the macroeconomic conditions in Chile and Argentina. So Latin America should also deliver a much better performance in the second half of the year. The continued challenge will be the UK business, but that is a very small portion of our international business. So net-net between Indonesia, Latin America and continued performance in Africa, we should see a much better performance in international in the second half of the year.
Okay. Vivek, a large part of your growth has come from new launches, almost 25 to 40%. Will we see that continuing over the next 3 or 4 months?
Absolutely. These new launches have just come into the market over the last 2 or 3 months. So in some ways, the scale-up of these launches is just starting. For example, one of the categories we feel very excited about is the out-of-home personal repellents in insecticides. That's a very underdeveloped market in India. We've launched a set of very innovative products. So over the next 6 months, as we scale up these launches, you will see continued benefit and impact from new products.
Okay, so finally, Vivek, can we work with two numbers? 10% volume growth, 20% margins.
I wouldn't want to give you any guidance as such, but clearly our intention would be is to deliver a much stronger second half versus the first half of the year.
Okay, all the best for that, and we hope that comes through. Thank you so much for joining us and speaking to us about your earnings. That's Godrej Consumers, but let's get back to the new listing. It's been a tepid listing for Varun Beverages. The management, in fact, is addressing the media currently. So